Assalamu alaikum. Welcome to our MS discussion sessions for the financial year 2022. I'm pleased to present here our performance for 2022, which has been literally the first year of transformations of our company. We have a presentation that covers our strategy, our achievements, and the key milestone we achieved. Overall, we are in line with our long-term strategy. Key achievements for 2022. First one has been the rebranding of the company, which we concluded in October 2022. We have embarked in first year of training of our staff. We accomplished humanization targets of more than 85%, especially in line with Central Bank of Oman. We have done a lot of changes, transformation in our key processes, which make us focus more on our business and be close to our customer. And the end of the year, the board approved an investment in our core system, which is the started implementations, and we are planning to go live by Q4 2023. I will pass now the floor to my colleague Abdulaziz Al-Absalam, who is our head of transformations, and he'll present to us in much more details. Following that, our chief financial officer will give the highlights and the performance, and then we'll conclude with the Q&A at the end. Abdulaziz.
Thank you, Chief. Assalamu alaikum and good morning, everybody. So, before getting into the financials and the performance of the organization, we'd just like to touch upon a few areas, mainly about the company and a little bit of what we've done and how did we do overall last year, 2022, and a bit of highlights on the areas that we would like to focus moving on from that point. So at the start, United Finance Company was established in 1997, and it went public through Muscat Stock Exchange back in 2002. Currently holding around 9% of the financial FLC's market, and our headquarters are in Muscat and Wataya. Shareholding distribution, majority shareholders are institutional shareholders, as you can see from the shareholding table. And our main business split into two, which is retail and corporates. Retail covering new and used vehicles, and financing also consumer goods. In addition, for corporates, we also finance equipment, working capital, sale and leaseback solutions, debt factoring solutions as well. And we also have a corporate deposit business, which looks after the liability side of the business. Last year in 2022, we managed to acquire two accolades for the performance of the company. One, which was for being the best performing company, small capital, by Alam Al-Iqtisad Oman, which is a well-renowned and prestigious award here in Oman. And the second award was an international award awarded to our CEO, Mr. Nasser Rashidi, as Best Emerging CEO, Retail Finance, back in 2022. Here we're just going to go through our network distribution. We're having a total of 8 branches across the country, and roughly around 10,000 active customers with between 135 to 140 employees, plus minus. There was a slight change since last year, where we've seen an increase, like our CEO mentioned, in our urbanization quota. Here we're going to introduce our board of directors, starting by Mr. Mohammed Al-Khonji, who is the chairman of the organization. And then we have our deputy chairman, His Excellency Hassan Ihsan Al-Nasib, and then our board member, Hussam Al-Bustamani, and Mr. Wasim Qareen, and Faribors Vasali, and Mr. Salman Lawati, and finally Mr. Mohammed Al-Raisi. Mr. Salman and Mr. Mohammed have recently joined our board as independent board members. And here we're going to be introducing our team our senior management team, starting with our CEO, Mr. Nasser Al-Rashdi, following by Mr. Abdul Aziz Al-Mehrazi, who is the Chief Operating Officer, followed that by Mr. Fawaz Al-Riyami, Chief Business Officer, and myself, Abdul Aziz Salam, as Chief Transformation Officer, and our AGM Human Resources and Admin, Mr. Mahmoud Al-Hadi, and our AGM Risk Management, Mr. Nanda Kumar, and our Head of Audit, Mr. Onkar Gopal, and Head of our Finance Department, Mr. Debrat Maji, who is seated here with us today, and finally our Head of Compliance, Ms. Maisa Al-Lamki. So here we're going to be touching upon a few key areas that ever since we started the transformation have embarked on. Primarily, our biggest investment was and still is, and our focus is on our people. As you've seen earlier, there's a new executive management team that's been put in place to look after the specific areas where we wanted to focus on. And there was a full performance management platform that was introduced, along with a detailed and very comprehensive training program, along with a talent development program for our employees. Last year, we've identified key talent individuals in the organization through an assessment center. And then following that was the development center moved towards from assessment to development center. And now they've already embarked, I think, halfway through the development program. In addition, we've re-looked into all our processes in the organization by building a library and looked into revamping key processes like our customer acquisition process. And we've seen positive results from revamping and re-engineering these processes, and that reflects on our operational performance as well. We've had good feedback from dealers and partners as well on these recent developments. Thirdly, we've looked into moving towards our technology piece, where significant investment has been done there to revamp our core system. This will entail on us giving us an ability to offer customers services and also unique products in a very different way as what we've been doing comparing to now. This is going to be a long-term investment, and it's also we're looking at concluding this transformation of our core sometime between Q3 and Q4 of 2023. This will also completely change the way we operate and the way we do things by introducing things like automation, and probably also doing things smartly by using artificial intelligence and so on and so forth. Now, coming to our fourth core focus, which is looking at our portfolio growth and looking at our portfolio performance, we've put in robust mechanisms within the organization, engaging all different stakeholders, some on a daily basis by producing detailed MIS reports and weekly meetings with the respective teams across business and also in other functions like collection. And lastly, our branch strategy or retail distribution strategy complements our overall transformation and complements also the idea of us leveraging our technology. We've looked into moving a few branches. We've successfully done that. The planning was executed last year, and we've seen some new branches being established this year in 2023. A few key milestones for 2022 that we've done, which played a significant role in the history of the organization. Number one, we'll touch upon the people investment. Like we mentioned earlier, we've built a very comprehensive, detailed training program through our partners for our employees, and according to the performance of the organization and according to also the feedback that we've got from our employees, it's been a very positive improvement, covering all employees with all areas, both hard and soft skills being covered. in addition to a detailed engagement program to help build morale and keep employees engaged. In addition, also what we've touched upon, the talent management program. Secondly, the partnerships that we've developed back in 2022 played a significant role in positioning ourselves as being an ideal partner for different industries. A few examples as can be seen on the screen, but significantly our key partners like the automobile industry, where we've done something with BMW Elgin last year in 2022 that played a very significant role in positioning ourselves as a game changer for the industry. Lastly, the brand was one of the largest or biggest changes that we've embarked on. We've revamped and redefined who we are and how we want to be seen. And as you can see now that we're rolling in with our new logo, that signifies quite a bit in our values, being a 25-year-old company, and also where do we see ourselves. And right now, the way we've positioned ourselves is being a partner that will help you achieve more, whether you're a customer or a partner or an employee. And that's the slogan that we are going with. Now, concluding, I'll be passing the mic to my colleague, Mr. Debraj, who will be covering on the financial aspects of the organization and how we've done so far in terms of the performance. Thank you.
Thank you, Mr. Abdulaziz. Gentlemen, to take you through our financial in details, before that we like to highlight few performance snapshots. To begin with, in the profit and loss account, we have recorded 2.6 million as operating profit in 2022. We have recorded net profit of 1.6 million, and the total profit and other comprehensive income we have recorded at 1.773 million. At our balance sheet, our net book has closed at 88.2 million. We see a 9.9% growth over the last year. The equity, total equity at 48.05 million, and the total borrowings stood at 39.5 million. If we look at very key ratios, our leverage is 0.94, as we are the best among the other FLCs. Loan loss coverage stood at 50.7%. For the impairment point, the ECL we have recorded at 709,000 for the year 2022. Let's look at few highlights compared with the previous year. Before starting in details about the financial performance 2022, I like to highlight the respected investors that in 2021 we have recorded one-of-a-kind revenue 958,000 in 2021 in the process of changing the revenue recognition from accrual basis to the cash basis. That resulted a revenue growth in 2021. So I'll request everyone, when you compare the previous year number, you eliminate that number from the previous year, and then the normalized operational numbers we can derive in 2021, and then we can compare apple to apple for 2022. So finance income we have recorded at 7.7 million. From reported number, we see a decrease, but if we normalize our previous year number, we see a growth of 6.6% compared to 2021. Fees income we recorded at 604,000, which is increased by 68,000 compared to previous year. Operating profit, we are at 2.59 million. If we normalize the previous year number, we see a slight reduction compared to previous year, only by 68,000, 2.6% degrowth we see in operational profit. ECL we have recorded 709,000 compared to 639,000 of 2021. If you see 2021 financial, total provisions we recorded at 1.3 million, which has a two element. One is the ECL 639,000, and we have recorded a management overlay, COVID management overlay of 663,000. That COVID management overlay we are continuing in our books along with others good amount of 2.3 million of provisions in our book. Net profit we have recorded at 1.6 million compared to reported 1.9, but compared to normalized profit at 1.4. We see a growth of 14.2% compared to normalized net profit of last year. The total profit and comprehensive income stood at 1.773 million in 2022. So if you look at the return on equity, we see at 3.34% compared to normalized 2.92%, whereas return on capital we see growth 4.59% compared to previous year normalized 4.02%. Let's look at in details about how we perform element of the profit and loss account. As I was talking in the previous slide, we see a growth of 6.6% in 2022. 2021, the normalized, the revenue we recorded 7.23%, where we have closed our book in 2022 at 7.71%. Sorry, 7.71 million. So we see a 6.6% growth in finance income. Net income, normalized net income was previous year 5.29 million, whereas we have closed our books 2022 at 5.94 million, which is a 12.3% increase over the last year. Operating profit, we see at 2.59 million in 2022. As Mr. C was mentioning at the beginning, and Mr. Abdulaziz was talking about a digital transformation investment in human resources, that resulted increase in the cost, which will derive the benefits in the future years in the long term. So we see operational profit is a little lower than the net 0.6 million net profit and the 0.7. 14.2% over the normalized operational profit of 2021. If you look at the yearly growth, we see a yearly growth of net profit. As Mr. C was mentioning, this was the first year of the digital transformation and other transformation. That started resulting in our books as well. We close our book at 1.6 compared to 1.4. This is the details profit and loss account compared to the reported number of 1.9 in 2021. The normalized operational profit is a column number 2, whereas 1.4 million is our net profit. And our audited 2022, we close at 1.6 million. So we see our net income has grown by 12.3%. Total income has increased by 12.4%. We are at 6.5 million. The profit before tax, we see a growth of 9.7%. We are at 1.886 million. And the net profit, we see 1.603, which is 14.2% over the operational normalized profit of the last year. And if we look at the total profit and comprehensive income, we close at 1.773 compared to the previous year normalized at 1.4, a growth of 26.35%. In the balance sheet, I'd like to draw your attention on installment finance debtors. We close our book, this net book we have closed at 88.236 million. Last year it was 80.3 million. So we see a growth of close to a 10% over the last year without impacting the growth in the NPL. In compared with other FLCs, we are the one company who continue reducing our NPL compared to previous year, in spite of all the pandemic effect we've seen in the market, but we are able to grow our book with a steady and very careful approach on onboarding the customers. So we close our book at 88.2 million. All other items, our property investment securities, we see a growth. We have revalued our investment securities in this year. That is stood at 724,000, and that resulted investment revaluation reserve in the part of equity we'll see in the balance sheet. Other elements resulted as a normal course of business. The loan book composition, if we see in 2022, our retail business is over 60% compared to the corporate business about 39%. Whereas the previous year, our corporate book was 45% and retail book was at 55%. So the business has changed the strategy, more focused into the retail segment in 2022 and onboarding the corporate customer as per our risk appetite and internal risk assessment. So we are more focused into the retail business and will continue in the coming years as well. If you look at the balance sheet, our total equity stood at 48 million compared to 47.3 million of previous year. The new line item has been added, investment evaluation reserve, which is resulted for the fair valuation of our investment. 170,000 has been added in this year. So total equity stood at 48.05 million. From the other liability side, our loan book bank loan stood at 36.2 million, another corporate deposit at 3.3, and creditors taxation as a part of normal course of business. So we close our total asset at 93.02 and equity at 48.05 and other liability at 44.96 million. If we look at the key ratios of our business performance of 2022, our leverage is at 0.94, one of the best in the FLCs. Bank borrowing 75.35%. The cost to income ratio 60.36. That resulted because of the investment made on the digital transformation and the human resource. The benefit will derive in the future years. The gross NPL ratios, we are at 21.72%. Whereas in the previous years, we were at 26%, we improved that to 21.72%. That resulted because of the constant effort the collecting the overdues, and the leadership team play a very important role in the collection and driving the business, and that resulted to our gross NPL ratios has drastically come down to 21.72%. ECL coverage 50.7%, return on equity before tax stood at 3.93%. Staff expenses to the operating expenses, we are at 60.87, and the harmonization ratio, as Mr. C was highlighting at the beginning, we stood at 85.51%, ahead of the CBO guidelines of 85%. So this is the end of the financial highlights and the performance result. Now we'll open the floor for Q&A session.
Before the Q&A, I'd like to just highlight one more time what are the key achievements for 2022. One more time, just to see that we are in line with our long-term strategy. So we had a lot of investment in our people. We developed a partnership model with the automobile companies. We have achieved rebranding. The third one. Then on the financial terms, our portfolio have grown from 80 to 88 million. Our net profit, on normalized net profit, is up from 1.4 to 1.6. The provisions and coverage continue to be okay. We are focusing on collections of bad debt, and during the year we have added provision of 709,000. Our return on equity on a normalized profit is at 3.34% compared to 2.92% the previous year, and return on capital at 4.59% compared to 4% in the previous year. So we are in line with the project. There are challenges going ahead, but with the new management leadership team in place, with the investment we are doing in technology, with focus on quality of portfolio, and at the strategic level, focusing on retail more than corporate and SMEs, is leading results, and we are hopeful to deliver higher results in the current year. Thank you. So if you have any questions we have to answer, please go ahead. So we conclude, and we thank you for your time, and we are always available for any discussions outside this the MSM discussion forum through the company's secretary. You can meet myself and the team at any point of time. Thank you so much.